Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this Friday morning, January 28th, late morning. There's really not much to say. I know when a lesson I learned long ago was, when the market volatility picks up and things really hit the skids, the desire for action and the number of dramatic predictions kind of increases just because things are moving around so much, mostly down, but also even during rallies. But really, the title of this week's Cabot Growth Investor is there's not much to do. Assuming you're already defensive, you can let everyone else kind of fight it out. We're clearly just still in a downtrend. And really, we're still in the midst of this leg down that started really the first of the year. Bounces have been limited. I think we had a 2-day bounce earlier in the month. And this week, we saw some encouraging action on Monday, and I'll get into some of the extremes here in a second. But we really haven't been able to build on that, and just there's been a couple of bounce attempts for a few hours, and then things kind of retrench. Now, like I said, I will say as a ray of light, we are starting to see some legitimate oversold type things, and I'm not an oversold guy at all. I'm a trend follower. I'm certainly not an overbought guy. That's usually the start of a new move when you get huge overbought signals. But we are starting to see, the number of stocks hitting new lows, the percent of stocks below the 200-day line, things like that are close to the extremes we've seen at lows during the last 10 years, even the pandemic low. We're not quite there yet, but it's getting there. It's certainly in the upper echelon of reading. So I would just say the odds of a bounce or some sort of workable low are growing. Maybe Monday's spike low will be that, sort of peak point of peak downside momentum and we build from there. But we'll see how it goes. Ideally, what happens is we hit a low soon and we bounce. Number one, the wheat will separate from the chaff. Right now, most things are kind of just getting thrown overboard, whether they're going to be leaders of the next advance or not. Okay, so it's kind of like one of those things. Number two is hopefully we can rally for a few weeks and then we can some sort of retest in the weeks ahead. Usually it's 6 to 8 weeks, but it could be longer. There could be 2 or 3 retests. Who knows? But somewhere down the line, we kind of retest, and then maybe you get some of these positive divergences in breadth and stuff like that. That's always been a pretty reliable sign for, a bottom. But at this point, I wouldn't sell wholesale, but if you have a lot of cash, we're about 68% cash, almost 70 in Cabot Growth Investors model portfolio. I wouldn't panic out of the remaining stuff if it's at least sort of holding up well or not the worst thing out there. But I would just stay defensive and let everyone else fight it out on a day-to-day basis. And the market will bottom here at some point. The market will rally. The wheat will separate from the chaff, like I said, and there will be a new sustained uptrend. But we're just not there yet. At this point, obviously, the selling pressures are intense, and we'll just have to take it day-to-day until that stops. Okay, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. There we go. See, well, my mouse isn't quite working, so I'll just use this. Okay, so here's the NASDAQ, and the major indexes you can just see really since the first of the year especially have just been on a skid. Now, like I said, here was sort of a nice little 2-day bounce, but that didn't last long. This Monday, I will say we did see something like 2,400 stocks on the NYSE and NASDAQ combined hit new lows. I think we're down as of yesterday to like 14% or something of NASDAQ stocks above their 200-day lines. Now, it has gotten down to like 10, 9 during some of these lows, like during the pandemic and late 2018 and late 2015 and the 2011 kind of mini meltdown we had, or not mini, it was like a 15 to 20% correction pretty quickly. So, we'll see how it goes, but it wouldn't shock me if this ends up being some sort of, I call it a workable low. It doesn't mean it's the low and we do this. I mean, I'm all for that, but I highly doubt it. It's just a low that we can rally off of and hold here for a few weeks. And a lot of the worries that have been discounted, kind of fade into the background a little bit. And then maybe we retest lower. But right now, I mean, these are all potential scenarios. And if things kind of continue and we do bounce and stuff, I might have a special video down the road that just kind of looks for like what we look for bottoms. Because we are trend followers, but we're students of the market too. So we kind of know how things usually bottom. Okay, we'll see how it goes. But so I think there's a chance that Monday spike low, you can see we've remained above it here for some of the indexes, could hold here for a while, but we'll just have to see. Right now, we're just still miles below. I mean, we're miles below all the moving averages. Even the S&P 500, which has been kind of strong, it's still living below the 200-day line here, well below the intermediate term averages. Not much to say here. Again, above this low, so that's kind of a, like I said, a ray of light, but that's about all it is at this point. New York Composite, just cycling through these. All of these are decisively below these two moving averages, which is our intermediate term trend model. And then you look at things like the IWM, which is the Russell 2000, that looks terrible, and the MDY, which is mid cap, same sort of thing. We'll see how it goes. I would just keep. I know it's hard. Like I said, when things get dramatic, up or down, you tend to have more dramatic predictions. There tends to be new. Like now we're starting to hear. Obviously, there's some funds that are probably blowing up, right? That are down, whatever, and they're having redemptions and margin calls. That's what happens when you get these fast environments. But, a lot of these stocks are already down 50, 60%. In fact, I saw a stat that said 44% of the NASDAQ stocks, which includes a lot of junk, but 44% of the stocks on the exchange are down at least 50% from their highs, which can get a lot higher. That number can get higher, but it's pretty extreme. It's one of the more extreme readings here in the last 20 years. But I would just keep it day to day. Try to be a little dumb, I think is my point, meaning like, hey, maybe this is a bottom, maybe we sink further, maybe not. But, I don't think it's going to be 1929 again. I don't think we're going to be eating canned soup for the next 10 years or anything like that. So we'll see how it goes, but it's certainly in a sharp downtrend here, and you want to protect your capital. I'm focusing more on, I wrote about what I'm kind of calling the growth tides. Our Cabot tides is our intermediate term trend model. So growth tides is really just a lot of these indexes I've been talking about, or funds really. So QQQJ is one. And this might be more representative of growth stocks in particular. So what we're really looking for is for this thing to hit a 5-week high. Well, a 5-week high at this point is still back here. Okay, so I don't think that's coming next week. I mean, I hope I'm wrong. But I think as time goes on, you start dropping off these days. It eventually will hit a 5-week high. The intermediate term trend will turn up. We just have to kind of wait for that. But QQQJ, FFTY, which is the IBD 50 fund, basically good relative strength, good earnings, good sales, good projections, same sort of stuff same pond that I fish in, so to speak. The IPO fund by Renaissance has a lot of stocks that are somewhat liquid and have come public in the last few years. So that's another area we shop in. And the IWO, of course, which is the Russell 2000 growth portion, which just is what it sounds. Very diversified, but kind of on the more it's a sign of speculative energy, meaning money being put to work in that, as opposed to blue chips or as opposed to like defensive stocks. Clearly, it's a good sign for growth in general. But at this point, they're all buried, so we'll see how it goes. I do think, like I said, there have been some extremes, so we'll see how that plays out. But what we really need to see is not extremes and oversold. We need to see the market go up for a few days, and then we can kind of work from there and see what went up, how did the defensive stocks hold up, that sort of thing. Okay. On that note, one thing I am keeping a close eye on here, and again, this is kind of secondary, but this is the XLP. I mentioned this last week. It has started to sag a little bit to the 50-day line. Obviously, it still looks pretty good. RP peak here yesterday. But let's see. I mean, let's say, I mean, I don't want to say anything bad, but I mean, say there's an invasion overseas or some bad news. I mean, unfortunately, but let's see how the market reacts. Maybe the market will rally on the news, but defensive stocks will sell off. And that could be just a little bit sign of a change in character. Right now, I'd say, since that Monday low, we've seen a little bit of it, like very tiny amount. But I can't say, it stopped outperforming, I guess I would say, but I can't say it's been a decisive character change. But I'm just keeping an eye on XLP. The other day, in fact, this was yesterday, I did notice like the XLP was up 2% when the market was up 2%, which to me is just a sign of like the market's kind of bouncing a little bit, but there's nothing really changing. People are still hiding in defensive stocks. So you'd like to see this kind of come off a little bit while the NASDAQ in some of these growth areas, or at least more aggressive areas, do pretty well. Just looking at individual name. Oh, I did want to mention, just so I don't want to sit here and spout all the bad news, but you are even seeing some of this. So this is the XLU, which I'm not talking about from a defensive perspective, but you're now even seeing the strong stuff get hit. I noticed like NextEra Energy, NEE, which has been a great, I mean, you can see on the long-term chart, it's been an awesome performer, but even here it's down 15% this week. I mean, that's the type of action you're seeing, whether it's forced selling or whatever. I know they had earnings, and I'm not that close to the situation, so it could be, for all I know, it's a bargain. I have no idea, but I'm just saying you're seeing now everything get thrown overboard, even things like utilities and stuff like that. So it kind of plays along a little bit into the, was Monday a puke low, or are we getting close time-wise to a workable low? We'll have to see, but certainly the damage is widespread. In terms of what's holding up, like I said, I do think once we get a bounce, definitely tune into the video after a good week or two of bounce, which we'll get at some point. Because like I said, I think right now it's just hard to, you can look at things that are holding up and gapping up on earnings. I'll mention a couple of those, and that will be key. But right now it's just kind of like there might be leaders of the next advance now that are still under pressure just because the market is so weak. It's once we start what I kind of call the repair phase, which will take a while. A lot of these stocks were basically on motorcycles going 50 miles an hour and fell off. They got broken bones. They got to be in the hospital for a while. But once we kind of start the repair phase, usually you can kind of see some of the stuff that's holding up best, that's rounding out a launching pad versus things that, they call it tennis balls and eggs. The eggs just stay splattered on the floor. The tennis balls bounce. So we'll see how it goes. Right now, if you're looking to nibble, and if you want to, that's fine. Just keep it small. The big money's going to be made in the next big trend. But if you want to kind of play around with some stuff, there are a few things that are hanging in there, mostly commodities. So this is Zim Shipping, ZIM. The numbers are kind of insane here. It is Israeli. I guess there's some dividend tax thing. I'm not a tax expert, so I'm not going to go there, but look that up. But my point here is on the chart. It kind of broke out here. Yes, it failed with the market, but as soon as it hit the 50-day line, it's right back. So my point is when you look at some of these charts and they're not super defensive stocks like, XLP, and they act like this, you wouldn't even know the market's having kind of a mini crash, basically. You're just saying, oh, this looks like a regular bull market. Stock looks good. Hasn't been a lot of volume here on the upside quite yet here the last few days. But my guess is, dips and shakeouts and pullbacks, if you wanted to nibble, use some sort of stop. That's up to you. Star Bulk, which actually kind of knocked us out of top 10 this week, unfortunately, with a stop. But just noticing it's not as strong, but you can just see it's had this kind of long consolidation. And this came after, it had a big run here, but there was years of, what the hell? Let's look at the monthly chart. I haven't even looked at it, to be honest with you. Yeah, look at Star Bulk. So this was back in the 2007, 2008 peak. Shippers were super hot. And it's had a little bit of a decline since then, as you can see. It's down, it was down 99%. So it's been totally out of favor. This is just dry bulk shipping. It's about as cyclical as you can get. But it had this nice post-pandemic or post-vaccine run, and it's basically just gone straight sideways. Maybe it fails, but it has perked up this week. So in terms of that shipping group, maybe it can keep holding. I'm not saying it's going to go up for 2 years, but even if these things can have a couple of good months. Oil is still hot. Now, one thing I would be on the lookout for is, oil prices have been strong. Oil stocks have been strong. If we do get a low, I'm not predicting this, I'm just saying if we do and we bounce, there could be some rotation. So you got to be a little careful with these. But Halliburton reported earnings, huge volume here. I didn't even check, but it's one of the biggest volume days going back, I think, a couple of years. Kind of this decisive breakout from this consolidation here, follow through on the upside. Business is good and getting better. Obviously, oil prices are helping. And if you do get kind of a shakeout in the group, unless it totally unless it's down $7 or something, my guess is pullbacks will be relatively viable, again, for a nibble. The trend is there. That one looks the strongest. I do like Schlumberger too, SLB. Same sort of thing. Earnings are out of the way. Numbers are good. They're expecting another big year of growth here. Debt is being cut. I think Halliburton bumped its dividend by a pretty good amount, sort of thing. And you're going to see they do pull back, but then it's, really sharp advances. There's a lot of buying pressure when the pressure comes off the market in the group. So my guess is pullbacks or consolidations or something will still work there. And then, of course, you have the producers, just to run through. There's a million of them, but PDCE, this showed up in top 10 this week. Kind of interesting. It's actually kind of just breaking out. Now, I do think the ones that hit new highs earlier in January are probably more of your leaders, but of course you got earnings season coming up, so we'll see what happens. But this one looks pretty good. Same thing, ton of cash flow, buybacks. Next 2 or 3 years, they're going to be printing money if prices stay this high. Marathon Oil, I've mentioned, MRO. This is one that you can see it hit new highs, whatever, the first or second day of the year, which is, the earlier the better. And again, I just like how you have in this pullback and then immediate snapback. Now, if we come in next week and it's right back down, that will start looking a little funky, but just taking it for what it's worth looks pretty good here. Devon Energy, DVN, same sort of action. Again, you're kind of seeing some of these. You saw this with Zim. They pull back, they tag the 50-day line, and then they really just rallied here to new highs and are hanging in there. So we'll see how it goes. And just to mention this, because I saw across the wire, this has been in top 10, not recently, but this is Apache APA. They got some overseas stuff, so I'm not going to get into it. But they said they released kind of an update on Q4. They haven't reported yet, but they said they bought back like 9% of the company in the quarter. That's the type of cash flow you're looking at. I'm not saying that's going to happen across the board. And I'm not even saying Apache, I think, is like a super leader, but you're just getting a lot of that in the group where it could continue to get revalued higher as long as oil doesn't fall, $30 or something like that. And then one last commodity name, Alcoa, there's still a lot of interest here. Now, this hasn't been as strong. It's been choppy. You can see some selling in here. But above the 50-day line, and again, maybe you're just, if you want to take a shot at it and use a tight stop, it's up to you. To me, I would just keep watching these things and see how they act if and when the market, finally bounces. Because, if the market, it could be something where the selling finally spreads to commodity names, number one, or it could be something where you get a rotation. So you got to kind of be on guard for that. Outside of that, there's not much in growth that looks great, but just, some fundamental stories and some charts that may have stopped going down. I've mentioned Dutch Brothers before. This is recently public. Still needs some seasoning, but a nice week here. I mean, certainly it's up, 15% this week. Of course, that comes after it being cut in half. But, recent IPOs can be crazy anyway, especially in this environment. So maybe it's kind of stopped going down here. Planet Fitness, I've mentioned before, again, failed breakout, but kind of trying to hold the 200-day line. You can see this big long base on the weekly, and you can see here it's been trying to sort of hold here. This is sort of inside baseball, but holding this sort of 80 area a few times, still holding despite the market getting hit nearly every day. So the longer it can hold up, the better the odds that it wants to at least, probe higher. Arista Networks, I have to say, I mean, we'll see. It's certainly not, you wouldn't look at this and say, wow, it's really resisting the decline. But I look at it and say, like, you're still way above the 200-day line. You're not even that, far below. You're basically even with the November lows, which, let's look at the QQQJ. Where's the November lows on the QQQJ? Right up here. So, compared to something like this is a growth index. Arista's up here, and sort of the rest of the complex is down here. So I still look at it like it's trying to hold up. Don't get me wrong, it could come in and fall apart, but I still think it looks like when anytime the pressure comes off the market, the stock pops a few bucks. So let's see if it can bounce and kind of keep resisting the decline. And just a couple of earnings names. They don't look amazing, but this is Seagate Technology. Not an exciting growth story, but it gapped on earnings here a few weeks. This was a few months ago, obviously. Chopped around, and then it got hit last week, but reported earnings this week. You can see the 3 small weeks of volume here, and now this big week. I'm not saying that's something definitive in a big declining market. And it's been wild here, big reversal yesterday. But you can see today, this morning, it's kind of back up here as the market's trying to rally or at least, hold support. So that's just something you notice. The other one here is, again, Corning, GLW, call it Glow. This is more of a steady eddy, reasonably valued, pretty good dividend. You're not going to get rich on it. But the stock can move over time. You can see it had a good rally post-pandemic. It's not like it's totally like a, consumer staple stock. And it's been kind of out of favor here for a while. And now, again, you're kind of getting this biggest weekly volume here in, since the middle of 2020. So year and a half or whatnot. And what's impressive here actually is it gapped up the next day. It's up so far today. Haven't seen many stocks where they're up 3 or 4 days in a row, So we'll see more of those as we get some gaps. Of course, we've had negative gaps too, for sure, Netflix and stuff. But as we get some more gaps, there'll be more things to put on the watch list. But really just going back to the market, I think let's just see how it goes here. It looks like the NASDAQ here is trying to rally up 100 points. So yeah, maybe Monday can be some sort of workable low. We definitely had some very extremes there that were, extremes that you would see sometime in the last 10 years at major lows. Doesn't mean I think we're going up, but I think what we can expect if things work out is the start of a repair phase where a lot of these stocks, the stocks that are down 80%, forget about them. But the stocks like, even something like a Snowflake, which I still think is going to be a leader at some point. Is this thing ready to lead starting today? No, but maybe if we bounce, let's see if this thing can really pop, or some of these things pop on earnings and start to round out structures that can be leaders of the next advance. Right now, it's still a little early to see that, but I'm optimistic that we're time-wise getting close to some sort of workable low, I hope, although hope is a 4-letter word, and then we'll take it from there. Right now, though, there's really not that much to do. Let's just see how it goes. I think right now it's just let everyone else fight it out. Hopefully we get a bounce, and let's just see how it develops, and we'll take it day to day from there. Okay, that's all the time I have. Thanks for listening, and as always, come by again next week for another Cabot Weekly Review.